The Indian economy continues to defy all odds of recession and outperforms on all fronts. When the world is battling to survive a global recession, with all major economies struggling to cope up. Yes, the world's fastest growing economy has expanded 7.1% in financial year 2023, a year which has seen many developing and developed countries in an economic downturn, with the major economic crisis of Sri Lanka and Pakistan. A 7.1% growth has surpassed all growth projections. So let us see what are the main areas that drive India's economic growth. So there are majorly 6 areas in which Indian economy has excelled in its performance. So let's discuss them one by one. The first is manufacturing sector. The surge in the growth of the last quarter was mainly contributed by the manufacturing sector, which added a gross value of 4.5% after a dismal performance in the previous 2 sectors. The Purchasing Managers Index, the Manufacturing PMI, Purchasing Managers Index, which is derived from the surveys of private sector companies, rose to 58.7 in May 2023, after 57.2 a month earlier. It exceeded the market forecast of 56.5. This has been the strongest growth in the factory activity since October 20 by the strength of demand. Output growth has been at 28-month high, with new orders expanding 23rd month running, and the expansion has been steepest since January 2021. Both overseas orders and employment has grown the most in the last 6 months. The second major area is exports. According to the data by Ministry of Commerce and Industry, India's exports, including that of merchandise and services, are estimated to have increased by 13.84% to a record high of 770 billion. Despite the global economic slowdown, the services exports have been estimated to have increased by 26.79%. This was the strongest growth in exports. It also boosted the overall exports of the According to the data, 17 out of 30 major sectors grew during the last financial year. Despite the recessionary trends everywhere in the world, growth expectations were not only met but surpassed. The third major area is foreign exchange reserves. The data of RBI showed that the foreign exchange reserves were at an 11-month high. India's import cover increased from $7 billion to $545 billion. India's foreign exchange reserves declined during the Russia-Ukraine conflict. This was a remarkable achievement. The RBI had been deploying forex treaty to defend the rupee when the investors sheltered into the US dollar. The aspect is lower inflation. The retail inflation moderated to an 18-month low in April at 4.7%. The CPI-based inflation, the Consumer Price Index-based inflation, for 2 months continuously remained within the RBI tolerance band of 2 to 6%. The fifth aspect is GST collections. According to the data released by Ministry of Finance, the GST collections in the month of May reached to a whopping high of 1,57,000 crores. This was a 12% year-on-year rise. This also comes when the GST collections in the month of April 2023 had reached to a record high of 1,87,000 crores. This would have been difficult to achieve before the introduction of GST. But still, some educated people call it as Gabbar Singh tax. This aspect is investment growth. The gross fixed capital formation, the addition to capital stock of the economy in full FY 2023 fiscal, rose by 11.4% to increase its share in the GDP at 34%. This was the highest since 2015. The government investment is now beginning to crowd in private investment and bring private consumption. So what do you think? Is the economy ready to unbridle its animal spirits? There always remains challenges. Subscribe to this channel for latest macroeconomics and finance updates. Thank you.